got my eyes on you. You're everything that I see. I want your high love and emotion endlessly. I can't get over you. You left your mark on me. I want your high love and emotion endlessly. Cause you're a good girl and you know it. You act so different around me. Cause you're a good girl and you know it. I know exactly who you could be. Just hold on, we're going home. Just hold on, we're going home. It's hard to do these things alone. Just hold on, we're going home. I got my eyes on you. You're everything that I see. I want your high love and emotion endlessly. I can't get over you. You left your mark on me. I want your high love and emotion endlessly. Cause you're a good girl and you know it. You act so different around me. Cause you're a good girl and you know it. I know exactly who you could be. So just hold on, we're going home.
Say what's up in the chat.
Just hold on, we're going home. It's hard to do these things alone. Just hold on, we're going home. You're the girl, you're the one. Gave you everything I love. I think there's something, baby. I think there's something, baby. You're the girl, you're the one. Gave you everything I love. I think there's something, baby. I think there's something, baby. You're the girl, you're the one. Gave you everything I love. I think there's.
All right, what's good, everybody? Happy Sunday. We're about to run this up on this live stream. We're going to prepare ourselves for this upcoming week. We have a big week ahead of us. And what's up, Anthony? How we doing? If you just now joined the live stream, say what's up in the chat. I would like to see who's on here. But yeah, what's up? How we doing? I hope you're having an amazing weekend. So, but yeah, let's get started though. Oops. Let's get started. So yeah, happy Sunday. Let me just fix my charts real quick and then we'll pretty much get this going. So let's see. Let's change the text real quick. All right, cool. Yeah, what's up, everybody? I was just vibing earlier, but what up? What up, France? What up, Bruce? How we doing? Just wanted to jump on here tonight and see what we got going on for this upcoming week. There is a few stocks that I have in mind that we can really look into. But like I said, we just got to lock in, right? We just got to lock in. We got to get this going. And remember why we're showing up, right? We're showing up because we want to make something out of this. We want to make sure that we are, doing the right things, but also making sure that we are basically staying consistent, right? Staying consistent is very, very important because without consistency, then there's not really going to be any growth, right? So consistency just means that, when you jump onto these markets, whether if it's wins or losses, whatever, you're supposed to be enjoying the journey. And there's just so much things to really do in this stock market. But yeah, say what's up though in the live chat. We're about to get started, but I want to see who's all in here. But yeah, what is up, Anthony? What up, Bruce? What up, France? How we doing? It is 8:07 p.m. Eastern, and we're gonna run up a little quick session tonight, and we're going to prepare so we can have an amazing week. All right. So let me see. Yeah, let's go. Let me actually send one more alert and we'll get this going. All right. So let me actually do that. All right, perfect. So I hope everyone's Sunday has been amazing. I hope everyone has relaxed and ready to get this going for this upcoming week. Whether if you're going to be on the live screens or you're going to be at the job or whatever you do, make sure to look at the stock market this week because there is, things that can go, sideways, but also we can see some big things happening possibly midweek. And make sure to check the economic calendar. Okay, so these streams are just pretty much for us to either learn about the stock market, learn how to trade, check the economic calendar, what to expect, and know which volatility or volume so we can go ahead and attack the markets. All right, what's going on, Chuck, for options? How we doing? How is your week? And also, are you enjoying today? I mean, are you just chilling and preparing for this upcoming week? Sunday night is homework time. That is what it is, right? So every day is homework time, okay? Every day should be homework time because you should be at least doing 30 minutes or at least an hour into putting everything that you've been watching or learning, absorbing, writing down. Go ahead onto a chart, mark up, whatever. I mean, go ahead and test it out. Do something like this, draw zones, back test, practice, see on how you can really put yourself into the market, even though if it's like past data, doesn't matter because if it worked right there, then it can work in the live markets. So make sure that you're practicing every single day because that is what consistency is. And also you're building the discipline because we're not here to just, jump onto screens and just live trade, but we're really here to learn and actually understand why does the market move the way it moves. Okay, so remember that's very, very important. Okay, and also homework time can be like watching a YouTube video, reflecting back on your previous trades. How did your week go? Was it green? Was it red? Was it a break even? How can you do better for this upcoming week? What do you have to look out for? And that's basically what your homework assignment is for every single day and how you can improve and improve and improve. At the end of the day, everyone in here, even myself, we're all a student to this game. Nobody's perfect. There's no such thing as perfection in this stock market, but there is room for us to improve and to grow as a trader. Okay, so before we get started, make sure to like up this stream. And if you have a friend or whoever wants to be part of this live stream right now, hit that share button and let them know that we are live right now, okay? And if you have not subscribed yet, go ahead and do that. If not, then that's okay. And hopefully that I throw in some free value, some free game that's going to say, hey, let me subscribe to RZ, okay? So yeah, make sure to like this up, subscribe if you like, and also, yeah, let's get this going, okay? Let's get this going. So the first thing that we're going to do, okay, is we're going to check on the economic calendar, see how we can prepare ourselves for this upcoming week so we can go ahead and again with full force and we can fully attack the markets the way that it should, right? So let's go over here. And what is today? Today's the 19th, so tomorrow's the 20th to the 24th, all right? So now look at this. Monday, Tuesday, Wednesday, those are the 3 days that we don't see anything going on, okay? I mean, there might be, I guess we could say like some new things that can pop up between Monday or Tuesday, maybe Trump speaks or whatever, then that is what we can check on this calendar every single day, okay? So, but overall right now, what we have as of now on the calendar is we have home sales on Thursday, and we also have CPI on Friday. So it looks like between Thursday and Friday, there's going to be a lot of value. What do you think? And also, if you are in the stream right now, say hello into the chat. I want to see who's all in here, and I want to shout you out. So, yep. So it is 8:12. Okay, so go. So, Friday, 8:30, 9:45, 10, and that's pretty much, I guess we can say the stock market opening is where we can go ahead and trade around these times. And it looks like Thursday and Friday is around 10 a.m. Okay. So make sure if you are trading on Thursday and Friday, make sure that it's right after 10 a.m. Eastern. Okay. So why do I say that? Is just because you have to be careful, like when the stock market opens and then there's news coming in at 10 a.m. or sometimes at 11 a.m. So just make sure that you are waiting for the volume to kick in, and then once it kicks in, then you want to go ahead and approach it, right? Or trade. If you do see a setup though. Okay, if you don't see a setup, and even though it's on one of these 2 days right here, Thursday or Friday, and if you don't see a setup, then again, there's no really point of putting yourself into that market. Okay, so make sure to go ahead and look at the economic calendar, and remember, make sure to check every single day or two to see if there's anything new that they put into this calendar. But for right now, this is on how it looks. Okay. So again, nothing on Monday, nothing on Tuesday, nothing on Wednesday. So if you want, you can have a full 3-day off if you like and come back on Thursday and Friday. So at the end of the day, remember, you want to trade when there's value. You want to trade when everybody else is trading. And what does that mean? That means that the option chain is going to be very, very liquid. And we want it to be very liquid because we want those contracts and those premiums to move. All right. What is up, Ariana Sharp? How we doing? How is your Sunday going? I hope it's going amazing, and I hope you are ready for this upcoming week. All right. So that's just pretty much what we have from Monday through Friday. Okay. So now I'm going to go over a quick mini trading checklist, and you can copy this down if you like to, or you can go ahead and, do it whatever you want, or take a picture. Okay. So over here. So this is pretty much a mini trading checklist that pretty much is something where you can go off of and use. You can edit this if you like to, but make sure that you are having a checklist every single day, right? So before the market opens, make sure that you're following some rules, a checklist, and if you do that, then you're going to be much more comfortable when you are waiting for the stock market to open. If you have anxiety, if you have like kind of a little bit of fear still kicking in, then let's stay off a little bit and let's just wait until we, learn more about it so we can make sure that we follow an actual checklist. And what you want to do is demo a checklist first, and then from there, live trade the checklist. Because when you demo first a checklist, you're going to see what you can change, what is working, what is not working, and focus on what's working and less on the ones that's not working. And that's what you want to make sure that, okay, this is the checklist that I want to use every single day. And if that's the checklist that I want to use every single day, then be it, right? So this right here is an example, okay, is number one is scan for liquidity early. Okay, so you want to check on a screener, or if you want to check, Stock Twits, or you can check Yahoo Finance, and really see what is gapped up or what has gapped down, or what was the increase of percentage in the pre-market. So pre-market is very, very important to understand and learn on what the pre-market is, and see how that pre-market can make you trade maybe the opening, or have a bias that has been confirmed, whether if it's upside or downside. And that is what the pre-market is for. So number one, you want to scan for liquidity early. So that just means that check the top gainers and the top value in pre-market. And how do you do that? Is by going on TradingView screener, or go on to Yahoo Finance. Okay. And then from there, number two is prioritize tickers with volume and clear momentum despite, the holiday or whatever the news is. Okay. So make sure that there is enough liquidity into the stocks that you're trying to trade for that morning. Number two is you want to focus on momentum leaders. Okay, so that just means that look for stocks like Nvidia, Apple, Tesla, AMD. Those are the main momentum, movements that people buy and sell every single day, right? So those are the top stocks. So you want to look for those stocks to whether to see, is the tech sector want to go up? Is the energy stocks going down, or is it the gas stocks going up? what is it, right? So you want to make sure that you are focusing on stocks that can really give you a confluence onto something else on what you're looking at. So for example, if I'm looking at Tesla and I want to use Tesla as confluence, and I know it's like one of the momentum leaders that gaps the market up or gaps the market down, then I can use NIO, right? Or maybe I'm looking at NIO at the time and I want to trade NIO, but I want to see how Tesla looks, because those are pretty much, the same, right? Which is EV, right? Electric vehicles. So you want to make sure that, all right, I can use a stock with another stock and I can use each other as a confluence for me to see if there's value. Can I expect the bias that I have set for this stock to play out? If so, then perfect, then I can do that, right? So that's number two. And you want to make sure that there is clean intraday structure. You want to make sure that there is a lot of buying, in whether if it's buying or selling, whatever you want to confirm is to appear into the market. If it doesn't, then there's really no point on trading, and you want to make sure that you are trying to protect your capital as best as possible. So you can favor small caps with news or large caps breaking key levels. So that's just basically what I just explained. Is if Tesla is ripping like crazy and maybe you're looking at NIO at the time, and if you trade NIO maybe from a supply and demand, a breakout, a one-sided direction, then okay, cool, Tesla's running, then I can use that for my NIO play to run as well. So that's pretty much number two, okay? So number three is you want to mark your key levels, all right? Mark your key levels, which is pre-market highs, pre-market lows, yesterday highs, yesterday lows, whether if it's VWAP or major support resistance or supply and demand, okay? For me, I like to look for supply and demand. Okay, I like to see the market show a big impulse move, and then after that big impulse move, then I want to see if I can draw my supply and demand zones. So for example, if I go to the Discord real quick, all right, so let's look over here in the, the daily watch list. If you're part of the Vault team, make sure to check the daily setups, because this is what I was looking at, all right? So this is, for example, if we are looking for a big push, all right, then we must see that in the pre-market. Everything here in this shaded area is the pre-market. And if we see a lot of volume kicking in, just like the way you see it here, and this is on Friday, okay? This is Friday on the S&P SPY. We saw like a big impulse move, and we're like, why the hell did it just jump up like that? That's like the first thing that comes in your mind. Why the heck did it just jump like that? Okay, let's break it down a little bit. Let's use these time frames to really see how can we understand what's going on right now, and I want to be part of that. Okay, if I want to be part of that, then okay, let's set our key levels. And that is what happened right here. Is we had two key zones, two key levels, in whether if it's this one or the one at the bottom, but I know where I'm looking for a reaction, right? And that's what these zones or these levels, support resistance, trend lines, whatever, we're looking for a reaction. And that is what it is we're looking for a reaction for us to either bet on it to go up or to bet on it to go down. And that is what the daily watch list is for. So let's go down even further down here. And that's what I said right here. This is on how the morning looks like for the S&P 5-minute time frame. And I'm watching the key levels for a bounce and get a chance to get into a call later this morning. And I said, wait 5 to 10 minutes after the open, or wait till 10 a.m. for a clear move. So if you look over here, even TQQ, we posted a TQQ chart, and then look at this. We saw the volume kick in. And that is basically what happened right here, or that's what we're like reading off of here, okay? And so make sure that you are following the daily watch list, because we are looking in live time, those live setups, and whether if it plays out perfect, maybe if it doesn't, it's whatever, right? We don't care. We go on and find some new levels. And that's what part of being a trader is to do, is to look for new key levels for you can, for you to trade off of, right? And at the time, I think I remember that I did trade this, but I didn't call it out, because I think at the time I was in the Dunkin' Donuts drive-thru. I was getting myself some donuts. I'm like, oh snap, SPY was bouncing off of this play, and I'm like, let me get in real quick, and I played it real quick. So again, throughout this week. All right, if you are part of Vault Trading Academy, make sure to check that tab, the daily watch list tab. And we're looking for live zones, real zones, to see where we can get a reaction for either a buy setup or a sell setup. Okay, so let's go back over here. And if you are enjoying this live stream right now, like this up and share it to someone that is just chilling, bored, and just waiting for the stock market. Send them this live stream right now and share them that we are live right now, okay? Because we do this every single Sunday. So number 3, so I guess we already did number 3. Actually, we did the first part. So now slow sessions favor ranges and scalps and breakout retests, not chops. So you want to make sure that you are careful with those slow sessions, because I know there is times that maybe within the first hour, the stock market shows you nothing but, clean moves, right? Nothing but volume candlesticks. But then out of nowhere, it becomes choppy. So you want to make sure that you don't get yourself into a chop. Well, sometimes you can, but you want to make sure that is there still volume there? If there's no volume, then maybe it's best just to close my position, right? And that is like something where you'll be like, I'd rather put my money into something else when I see clear moves, more better setups, and more value, okay? And there's nothing wrong with taking your money out from the stock market so you can come back into the stock market, because what you are is probably a scalper or a day trader. So just keep that in mind, okay? So number 4, trade only A+ setups, okay? A+ setups. What you want to do is you want to wait for a clean break and hold or sharp rejection at the key level. So again, example, all right, so this is a nice example actually, is we have the zone, we have the key level, and now we wait for the break of structure, a pullback into that key area. And again, this can be whatever strategy you use, doesn't matter, but you want to see the reaction plus a hold of that level. If it holds really nicely and you see momentum candlesticks and engulfing candlesticks, not little candlesticks, but you want to see big candlesticks. And that is where you want to say, hey, most likely this can play out. And I want to see, okay, is this something that I can go ahead and continue watching and possibly place a trade? Let me continue with my checklist. So this week, what I want you to do is to create a checklist for yourself to see, is everything that you are looking for to enter to a trade, is the checklist being met? If not, then move on, go to something else, and enjoy the rest of your day. All right. So that's pretty much what I want everyone to do. And if you want this, then you can watch the recording, screenshot if you like to, whatever you want to do. Number 5, okay, is to execute fast and clean. Okay, quick entries, exits, and secure those profits very, very fast. Okay. If the momentum dries up, step aside and protect mental capital. Okay, so that's just saying, if you're not quick enough, then and it becomes choppy and it pulls back, and you're really seeing a little bit of a struggle within those movements, and it's not really going the way that you wanted to go to, then just get out, right? Protect your capital and then move on, and you can continue on placing more trades. So think about it. If I were to place a trade and it's like very, very choppy, most likely maybe I'm red, maybe I'm down like $100, maybe I'm down $200, then let me take that, right? Let me take that off and let me put myself back into the market once I see more better volume and go from there, right? But yes, if you are also in this stream right now, say what's up in the chat. I want to see who's in here. I want to see who's in here, and I want to shout you out. But yeah, thank you all for being part of this live stream tonight, okay? So now, what I want to do now is I want to go to this chart right here, okay? So let me actually delete that, and let's do it, right? So yeah, let's do this. All right, perfect. I don't think this is live. We are live, right? So are you saying the chart? Yeah, I think the chart is live. It's running. So we can see basically right now is that, so now we basically see that the market is making higher highs, higher lows, higher highs, break a structure, all right? He's not saying anyone's name. Yeah, Chuck for options. We are live. It's 8:27 p.m., okay? So look at this. market running up, higher highs, higher lows, higher highs, and we have a clear break of structure. All right, so the market's open right now. But the thing is that right now we are basically in a supply zone. So on this supply zone, look at this. This is a zone whether we're going to reject very hard or the market might just go up again. All right, so make sure to have this zone. If you are using supply demand zones, then make sure to apply this zone right here and see if you can get either a call or a put, whether a buy or a sell, and whether to, let's just say if we see more red candlesticks, maybe by tomorrow, maybe within the 2 days, then go for those sells. Go ahead and bet on the market to go down, because on that zone throughout this whole week, there has been like 3 to 4 rejections touching that zone. So I can show you right here. So it's like this, 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 and this, right? So that's 4 rejections. 4 rejections, but every time it rejects, the market comes right back up. Bet this is live. Yep, this is live. So let me put it back right here. So the thing, like what's showing that it's bearish, it's basically this break of this low right here. So I'm gonna put it right here. So let me just change that color real quick. It's the break of this low. So what I'm gonna do is I'm gonna zoom in and we're going to mark this out together, okay? So break of structure, we have a supply zone. Okay, supply zone just means the area where there was a big sell-off at the time, and at the sell-off, we are now coming back up and retesting, and we basically mitigated and fixed this whole imbalance, and that is what the market was doing this whole week, right? So now if I go to maybe like lower time frames, we can possibly see maybe a better answer to whether if it wants to do this or maybe just do this, all right? So that is what can happen. So remember, the market's still very, very bullish, right? That's what's showing on the market. But the thing is, like, we just had one break of structure, and this is from the bigger time frame. So let's go to a lower time frame, and this is NAS 100. And if you see me do this on NAS 100, then it's also the same thing on QQQ, all right? So look at this. All right, perfect. So now, all we're doing here is we're learning more about what's happening inside of this zone, okay? Inside of the zone, that does not mean that, okay, just because I see sells means that, okay, let's freaking bet on this to just drop very heavy. No, I have to be very careful to see what do I have to do, what is my game plan, and what is pretty much next, right, for me to look at and see what I can possibly trade. But again, the supply zone is just telling us that most likely, if we see more sell-offs, then we can see another run down, okay? But the thing is, like, if you look at the market throughout this week, it's just been doing this, right? Just going up and down, up and down, up and down. And right now, there is people shorting NAS or the ES just because it hit like a key level right now, and they're betting on it to go down. And people are making money right now. Making money or losing money, okay? So look at this. Let's find the current drop. All right, the current drop right now, like the lowest low would be like over here. Okay, so let me actually put it right here. Did I change the color? Right here, that's the lowest low. All right, let me make it a little thicker. Perfect. So now after that, the market was blasting off, blasting off, blasting off. Well, we have like two different things. All right, I'm gonna break this down just a little bit more. And all I'm doing here is just reading more about the candlesticks, the price action, and what it's telling me, and how I can go ahead and approach this by tomorrow, okay? So look at this. Market drop right here, and that is what caused this break of structure from this level here, okay? Because on the daily time frame, this was the key level. If that low been broken, then that has confirmed this like supply that we have right here. But now that I go ahead and move forward, we can see that the market gapped up, and the market was just like going up, going up, going up, going up, but it left behind what? An imbalance, right? And remember, these imbalances are there for it to be filled maybe within the next day, maybe within 3 days, maybe by next week. I don't know, right? So that is just an area where the market can come back down into once the market starts showing you weakness, right? So we already seen the weakness right here. That's one. All right, the market was uptrending, uptrending, uptrending at the time, but then look at that crazy sell-off. That right there is just a big institutional sell-off from that supply zone, because inside that supply zone, what's intact is just sell orders, sell limits, and that's what's causing the market to drop, right? Just due to the supply and demand concepts. So now after we have that, the market came all the way down to the downside, and what did it do? Fill in the gap, right? Which is right here. And what is usually at a gap? Demand, right? Because if you think about it, the market shot up from like here to here, and it came all the way back down near that same area, and the market just bounced again. So if it bounced again and the money came back into the market, which is what we see over here, then that just shows you that maybe they want to come back more into that supply zone so they can mitigate more of this sell-off that we had on the previous Friday, right? Because that kind of was crazy, because we just saw like the market just tank and tank and tank. But again, you can go for calls, you can go for puts, because that is what's showing you on this price action. But then look at this. When the market came right back up, there's another sell-off, right? So these sell-offs, there is opportunities. So, and then look at this. Another sell-off right there. And after that, another sell-off, there's like 3 rejections already. And now when the market came right back down, it just keeps hitting on the area where there was a lot of buys right here. Okay, so that's basically like the demand zone. So now that we found the supply zone, now we can draw the demand zone, because we're not just seeing 1 touch, now we're seeing 2 touches. So it shows that most likely, this demand zone can be used for the market to come back down into, and it can mitigate and it can bounce, right? So let's put it this way. So what I'm going to do here is I'm going to just draw a zone just like this, right? And you can see that again, there is, of course, it's a real level, because there is money, being tapped into this zone. And then every time it does, it bounces. So now it's just going back and forth. So I'm going to turn the top one red just like this. And we're going to go ahead and leave this just like this. And this is like a demand zone. All right. So I'm going to put it like that. And there you go. So now look at this. The same thing that you see the sell-off here. So over here to here, it's the same thing over here. The current sell-off from Thursday coming into like Friday, and then from Friday came right back up. But then now look at where it came back up into Thursday's sell-off, right? So now what we want to do is we can now put a inside zone that shows us that this can be a zone where we can use for the market to come back down. But pay attention here. When we have this zone here, just like this, it's kind of a good thing that we have a supply zone, which is behind. But now that we have also an inside zone, meaning that we're using it based off the reactions and on how the market sold off from the big zone, now we can draw like a mini zone, and that's what we just did right here. Because what we're trading is we're trading the up and down movements from this up and down range, right? But within the up and down movements, there is demand and supply being created on both sides. So now think about this. If we sell off this supply zone, right, and the market tanks right back down, you might be like, well, what can I go ahead and target? Well, there is something that I'm already looking at where we can go ahead and target right here. So that is liquidity, right? So this is liquidity, and that just shows you that there is money at these areas where the market can come back down into and sweep, right? So if the market takes out those levels, because that is liquidity point, so I'm going to do something like this. And if you want to draw out your charts like this, you can, but this is what I'm doing. This is my setups. This is what I'm going to go ahead with this upcoming week, because again, we already broke down on how the daily looked. We looked at on how the 4-hour looks, and now we're like more into these lower time frames, so we can see like where we can position ourselves to, whether to day trade, scalp, or just hold off for a bit. Okay, so we're doing a liquidity point right here. So liquidity right here. So liquidity. So if the market rejects the supply zone, then we can come back down and sweep that liquidity out. And what is below there? There is demand, right? So now look at this right there. So this is the QQQ chart, but also NAS 100. So it's showing me right now that NAS and QQQ should see a sell-off overnight, and if it does play out, then perfect. Then we can, see what we can do for the market opening. So let me just draw this demand zone. There you go. And then if it comes back down to maybe we wake up into that demand zone, if we wake up to that demand zone, then hey, we can go for buys or calls if we see the reaction for the money to kick back into the market. And if it does, then we can come right back up like this and then jump right back up to the upside. Okay. And that's pretty much what's looking like. So, I mean, there's really no point of going to these lower time frames because we're not live trading right now. But I were to say if we were to be live trading on maybe like on a Forex or futures, I'll be on these like low time frames and I'll be like confirming like crazy on these lower time frames, right? So something like this. If you have like a zone, a clear area, all you're doing here is just looking at the recent highs, the recent lows, and you're just looking for the recent break, right? So right now we have like a break of structure right here inside that supply zone. Market came up very hard into that supply zone, but what made this high? What made this high was right here, this level. That is the last pullback that made the new high, but now we're breaking right back down again. So let's just say if this were to be the morning, right, tomorrow, this is on how I would set up. Watch the break of structure. That's what we did. Now we broke this one, right? Now we have two breaks of structures, and now what is my supply zone? I have two supply zones. I have this one, right? And I also have a one up here, right? So that's two zones, just in case if that one breaks. But I have two zones where I'm expecting a reaction, and that just means a rejection, right? Because we're looking for a rejection into one of these zones. But since I'm not trading right now, then there's no point of looking for these lower time frames. In the meantime, take a note of this. If you haven't watched the one YouTube video that I posted a week ago, which is whether if it's going to be the higher time frames or the lower time frames, which is the one that is best for you. So make sure to check out that video. It's on my YouTube channel and it's called Higher Time Frames or Lower Time Frames. Which one should you really trade? And that would give you a better understanding of what we're talking about right here. Okay. So for right now, this is on how it looks, and maybe we might see a rundown tonight. And if so, then that'd be amazing, right? So think about this. If you have your level just like this, leave it and wake up tomorrow and see on how that level reacted, right? Because again, this is going to continue on running and running and running until the stock market opens, right? So that is NAS. I mean, it's the same thing like QQQ. Nothing is different. And it's the same exact thing, right? It's the same exact thing. So there you go. And then you'll also have like the demand zone right here. And right now what's going on, if QQQ were to be like open right now, which it's not because the stock market is closed, is basically inside of this zone, right? It's inside the zone right now. And it's doing something like this. So that's just what's going on QQQ and NAS 100. Same thing with like SPY, right? SPY is the same exact thing. Everything right now looks so far the same, okay? So that's basically what it is for QQQ and also the S&P. So just keep in mind that this trading checklist is what you need for this upcoming week, or just make sure to have a checklist overall, right? For every day, right? Or every week. See on how you can do better, see what you need to improve so you can go ahead and attack the markets. So what I also want to see is SQQQ real quick. And in the meantime, what I want everyone to do is if you have a stock that you want me to mark up, put it into the chat right now. And I'm going to write a note real quick right here. Throw stocks you want me to mark out. So in the chat, make sure to put stocks that you want me to mark out, and then we'll do it together, okay? So while I do that, I'm gonna go ahead and break down SQQQ. So it looks like SQQQ, which is the opposite, which is I call it anti-QQQ. is the same exact thing. Market is dropping, market was dropping, market is dropping, but then look what happened. We had something like this. We had like a trend line. Remember, we were expecting like a breakout, and that's what happened right here. Trend line, trend line, trend line, and then after that, it just broke above and just saw like, I guess we could say new highs at the time. And then the liquidity point right here is this, right? So that's like what's going on. But now the thing is that we have basically supply and demand, right? So we have demand right here, which is the cause of the impulse move, but also we have like a supply zone, right? On this supply zone is showing us that there is some sort of like reactions at those areas. But if you are trading SQQQ, then make sure to, yes, it's basically the opposite of what we just marked out on NAS 100, but just inverse it, okay? So if I go ahead and look at this, it's the same exact thing. We have a break of structure, market flew up, but then every single time that it bounces off this demand zone, there is money kicking in. So what we want to see is for tomorrow, for the next two, if this zone here holds, then okay, we would have to really trade it just like the way we did here, let's say, right? So let's see on how that happened. So let's go on a 5-minute and look at this right here. So if you see that this is running up, then most likely on Friday, what happened, or Thursday on SPY or QQQ, they were running down. So here, it's the same exact thing. What you want to see is you want to make sure that you scan for liquidity early, focus on momentum leaders, mark out your key levels, which is what we just did, and trade only A+ setups. Wait for a clean break or hold in a sharp rejection on those levels. So look at this. Market came back down, shot up to the upside, and then money was starting kicking in, right? So there's many ways to trade this, but just make sure that you're using the time frames that you use so you can go ahead and place your trades, right? And this zone here that we have on this green one, it just means that we are betting on the market to go up, okay? So that's basically what SQQ looks like, and I'm going to go ahead and trade this because, hey, why not? I like the demand zone. It looks very, very clean. Sometimes when I look at SPY or QQQ, yeah, they're both going the same direction, but one might have better key levels. Okay, one might have better key levels than the other, and so I want to look at them both and see, okay, one of them is not really touching my supply zone, but the other one is. It's actually in that supply zone. And that's what I alerted the TQQ trade and also the S&P trade, right? So TQQ was like this. So over here, just like this. Same exact thing. Market was coming up, coming up, coming up, and then out of nowhere, blasted off, came back down, retested, and look at this. I'm still expecting the market to come a little bit more. Well, actually, it is because remember S&P or the NAS 100 is a little bit higher, right? A little bit up. And we could see TQ by tomorrow in this zone, and then we can go ahead and trade that supply zone if the market wants to tank right back down. And if so, then that is what it is, because this is supply zone that we had, that we were looking at on Friday. It didn't happen on Friday, but it happened, tonight. And now tonight, it's pretty much going to give us the better answer to see what we can go ahead and trade, right? For tomorrow. So lift, let's do lift. All right. So lift, let's go on to a 4-hour time frame. Yeah, because lift right now is basically in a demand, and this is like the bigger picture. Okay, so when you are looking at these stocks or when you're looking at these trades, you want to make sure that you're looking at the bigger picture, but also is it in the key zone? Is it in key level? And if so, then let's go ahead and wait in a couple more days. Whatever you're trying to look for, whether if it's like a swing, right now it's kind of too early because it hasn't really reacted in a way that, let's go fully long. Because if you think about this, we had one break, right? So look at this. Break, break, little break. This is a lower low, higher high, higher high. But now it just came back down just like this. I would say the best thing to do here, if you are trying to trade lift, is just to start seeing the share price slowly increase which is trying to get above 21. Okay, so 2-1. So if we get above 21, then that shows you that most likely we are now building a trend that is now coming off of that demand zone. If the market is holding this demand zone and we are starting to see higher highs and higher lows, then that is a good sign. Because if you look in the past, if I were to do it like over here, just like this, the market came up, came back down over here, and then look at this. It started building its own trend. And you can find ways to enter like maybe like right here, or maybe like right here, or maybe like right here, or maybe like right here. It all comes down to your entry criteria. And then after your entry criteria, your checklist, right? So your entry criteria is inside your checklist. So right there. So that's why I'm saying checklist. We might, let's just say me and Bruce, we might be looking at lift at the same time, at the same moment. But on his part, maybe gave him a confirmation to enter already. And on my end, there hasn't been any confirmation. So what does that mean? He takes a trade, I don't take the trade, right? He takes a trade, I don't take the trade. He's already in the trade, maybe he's making money. Right now I'm not in the trade, I'm not making any money, right? So it's all about when you are on these setups, when you are on these trades, make sure to have the checklist, because that checklist is what represents you, right? And that's what you're going to go use into the stock market or whatever market you're trading, stock market, Forex market, crypto market, futures, whatever. Make sure to have a checklist, right? Know where you're going to enter, get the confirmation that you need, where you're going to enter and then exit, whether if you're all right, have an extra strategy, and also when you are wrong, when it's not going your way, have an extra strategy as well. Okay, so that's basically what that checklist is for. So what I'm looking at on lift is to, right now it's sitting at the 19.53, and that's on how Friday closed. But if the market comes right back up and breaks above that 21 mark level, then we can start saying, hey, lift could be ready to lift, right? Lift off. And if that is the case, then hey, perfect. So that's lift. All right. So IAG. All right. So I'll look at IAG. So right now, as of now, we can say it's like a double bottom, right? Like a double bottom, and it's like pushing up, right? Or it could push up. And if it breaks above the neckline, then what do double bottom stand for? Is to go up, right? Is to see some upside. And that's what that double bottom is for. So that's a good thing, right? So if I go to like a daily time frame, the same exact thing. Remember, after a crazy run up, the market usually comes right back down into what? A key level, and that's what usually happens. So same thing like over, I guess we can say like over here. Market comes right back up. Oops. Market comes right back up, and then it comes right back down, and it takes its time. We don't know how long it's going to take when the market comes right back down and tests this key zone down here, right? Because it can happen within 2 days, it can happen within 2 weeks, it can happen within 2 months, but we have a zone there, and it's there because we gapped up and it's a valid key level, right? So that's why, again, when you look at these higher time frames, you have to be like, well, this week lift is in demand on the bigger time frames. Let's dive into those lower time frames so I can see, can I take a trade for today for the upside? And that's possibly, like, most likely your main objective is to look for buys and buys and buys. And if there isn't anything, then there's no point on buying, right? So you want to make sure that those zones are valid. IAG, haven't seen that one, but it looks like IAG, we have like a gap. We have a gap that can come back down into, but we also have more gaps down here. All right. So what I'm looking at basically is this. All right. I'm going to break this down very quick. So we have something like this: market making highs. All right. And continue on dropping those stocks in the chat. All right. I want everybody that's in this call or on this stream, throw on those stocks, put it into the comments, put it into the chat, and we'll go over it together as a team. All right. So higher high, higher low, higher high, and then after that higher high, market runs up, runs up, runs up, boom, right? So there you go. So that's basically what's holding on the market right now. And now we're looking for a clear above this high. And if we break above that high, then perfect. Of course, we see a continuation. And now what we're going to do here is we're going to leave a little gap right here. And also we have lows right here. Oops, where did it go? Right here. So we have highs and lows, and basically what we're doing here is we're marking out the, well, we're not doing pre-market highs and lows, we're marking out the main highs and lows from the bigger time frame. So it's basically the same thing, but we're not looking at the pre-market, we're looking at the bigger picture. So we have a high and the low, but at the lows, we have equal lows. And that just means these areas can be cleared. Even if there's like demand down here and it touches this area, we could see like something like this and then a sweep, right? And that is just liquidity. But what's underneath it, if you look at it, is like a hidden demand zone. And that hidden demand zone is like right here, okay? So right here. So you just got to be careful on this one. This is what I'm like really looking on like this to do. If IAG does something like this, then perfect. Then you will see what, you know, what goes on here and also what this demand zone looks like here. And then if it touches this area, then we can start seeing that big buy up to the upside. And then we can start now taking out these highs here, which is of course liquidity points, okay? But let's just say if it doesn't and it doesn't touch this area, then most likely we might just run right back up. But it's just gonna look like SPY in the video, or not SPY, but SPY in NAS, right? Because remember, after a crazy sell-off, what happened? Pricing come right back up and consolidate just for a bit, right? And then if it wants to drop, then hey, perfect. But there also can be something like this where it can run up, and then you could do something like this. And if you see the volume, then that is where it's like, okay, change of plans. Let me go ahead and just trade the volume because it looks like this stock is just going to continue on ripping and ripping and ripping, right? But yeah, overall, I mean, this has been doing nothing but going up. But I just see like most likely this going on, just like this. Okay, so tomorrow or maybe the next 2 days, we'll get a better answer on IAG. But yeah, right now we just sold off like crazy on Friday, right? Yeah, on Friday. So that's Friday. Let me do another one, IREN. IREN, let's see. Well, this looks something to like, what was it, like USAR, right? I think you shared that with me the other week. It looks the same exact thing, is that we are most likely gonna just drop and continue going lower. So it's this right here. So we have this low, we have this high, we just broke below this low. Market is like really just holding on for the dear life on that level. And I would say if we break below Friday's, what is it? Yeah, Friday's level at 57, then most likely we're gonna see money just do this, right, on this, and it's gonna fill right back into maybe like these demand zones right here. So if these demand zones, let's just say they work and they touch, then hey, you have a nice, great opportunity where the market can now come right back up to the upside. And instead of buying our IREN at whatever price is at right now, 60 or 63, 68, then you have like a better price where you can purchase it around 48, 44, or 40, right? The low 40s. So higher time frame wise, this tells that continue going up, right? Continue going up. But the thing is, like, you want to just wait until the market starts giving you more of a consolidation or just a touch. So I'm going to write a note here. If you want to go ahead and continue on watching this stock, most likely it's going to be like this. And this is what I would do, is wait for more consolidation. And number two is wait for demand zone to be touched. That's it. So either number 1 or number 2. So here it's just wait for the demand zone to be touched, and then we can consider longs, or maybe just wait for something like this, consolidates, and it just rips out of nowhere. So IREN is pretty much not ready. Just give it some time, and then when it is, then one of these two is going to play out, right? So whether if it's number 1 or whether if it's number 2, okay? So, I mean, yeah, you can get yourself into here, but then it's just going to go back up and down, up and down, up and down, and that's what the S&P has been doing, right? Up, down, up, down, up, down, and it's like, come on, let's do something already. So, NVIDIA, let's do NVIDIA. So NVIDIA, we had something like, we had like a consolidation here, supply zones. We were betting the market to go down, and that's what it did at the time, right? When the market was going down here, it played out perfectly. But then now when the market came right back up, hit the zone, look at this, there are still some sellers in this range. But now that we have sellers in this range, market came back down, is now touching demand zones. But now look at this. When the market was making an impulse move, it failed to see a continuation up to the upside. So that's kind of like number 1, concerning, right? It's like, well, why didn't it jump to the upside? Why didn't it continue going to see new highs? And why didn't it create clean levels or clean zones? Let's read more about it, right? So everything that we do on the chart is like we are reading over and over, page by page, every single day. So every single day should be like a page. Flip the page, read it. Flip the page the next day. So every time you're flipping the page, it's like the next day, the next day, the next day, the next day. So after the next day, the next day, the next day, you're reading more about the story, so you can go ahead and see, all right, then this is what I can go ahead and do. So page by page by page, it's going to give you the analysis or the confirmations that you've been waiting for, and patience is part of the game, right? So right now it's like higher high, higher low, higher high, but then right now we have like a clean break of structure right over here, right there. So that's a clean break of structure. But now the thing is, like, if this really wants to go down to the downside, what I want to do here is target lows, right? I already see equal lows over here, right there. So this trend line right here is equal lows, so that's liquidity. We also have more over here. Okay, so we have more like right here, and right here. Okay, so that's all liquidity points. So if this were to be like a 1 minute time frame, I'll be saying the same exact thing. It's like it's bearish on the 1 minute, but also it can flip right back up to being bullish if it breaks above the current highs. Okay, so it's like number 1 and number 2 again, right? Number 1 and number 2. But the thing with this one, though, is that the demand zone will be most likely over here, because it has like an imbalance right here, plus liquidity down here. So if we go ahead and just say the market might do this, then that'll be like number 1, wait for the demand zone to be touched to go look for longs. Or you can be like number 2 is wait for this. If the market runs up, wait for more of a up and down, and then out of nowhere, it just rips, okay? So you might see like right now it's kind of like complex a little bit, but it's a good thing that it's complex, because that's just going to help you on read, and you're like, okay, now I'm like slowly understanding more about what NVIDIA on what it wants to do, okay? So as of now, it's like everything here is like fresh drops, fresh pullbacks, and it's just like, just wait, right? I mean, for me, I might wait till like possibly like Tuesday or maybe like Wednesday just to trade. I will have to really see, because these levels right now that we're looking at across these markets or these stocks, I'm like, is it really worth putting myself into those, let's just say, those movements? And if it is, then hey, it'll be something quick, right? But as of now, NVIDIA on a daily time frame shows you that it's a break of structure, and if that break of structure does mean that it wants to go down, then I want to see another red candlestick and I want to see break of new lows, and that would be this low right here. So this is like what I would be looking at right here. And if it breaks down, then you can go ahead and, I wouldn't say swing it. I would say most likely try to day trade it, because out of nowhere, yeah, you might see some crazy rundowns, but then out of nowhere, if you do swing it, it can come right back up like this, okay? Because again, if you look and zoom out just like this still looks like something like this, right? It looks still something like that, right? So that's why we got to be very careful when we are too technical with these swing points, and also using market structure, right? Because sometimes you might be like, well, it broke structure here. Let me go ahead and just throw in crazy amounts on these puts or on these sells. And then out of nowhere, you might see something like this go on. And it's just because the trend is still currently bullish. So that's why, again, having a checklist is very, very important. And that's going to lead you on what you have to do for that morning. And whether if it's going to be a day trade, a quick scalp, how long you're going to hold on to that trade. And then from there, whether, whatever the outcome is, accept it, move on, and find some more setups. Because again, market's going to continue moving and moving. And that's what we want to continue doing. Move and move and move and stay consistent. So at the end of the day, the real edge is basically on how you can protect your capital. It's not about just, being right every single time. It's about, how did I not lose this X amount and I'm still in this game? Just because I learned on how to master risk management, and that is really what's going to help you to succeed in this market, is to protect your capital. And when you are right, maximize it. When you are wrong, minimize it. Okay, so that's pretty much the video. Okay, let's see, NOC, so knock. So knock would be, I guess we can say over here. So we have a break of structure, and on this break of structure, we have this high. So the thing with this one though, is that we have like a demand zone right here. So if I'm doing this, let me just actually make sure that's like right on the dot. Okay, perfect. So it looks like around this area is what I'll be expecting for this stock to come back down into, and then hold and then run. So this is very textbook. Okay, you just have to be more patient with this one, because it's going to be the same exact thing, right? Because if you were to do this on a 5-minute or 1-minute time frame, it'll be the same exact thing. So look at this. All right, we're going to go back onto SPY real quick, and I'm going to open up the second chart, and let me go on SPY, and we're going to go ahead and do something like this. So look at this. So what we see on the left hand side has already played out here on the right hand side. Okay, you see that? So whatever happened on the left hand side is what happened on the right hand side already. The only thing that you have to do is just let the market come back down to that zone. So whatever your plan is, right? Whatever your plan is to wait another 2 to 3 days and just to have that zone touched. But now when it touches that zone, maybe you might have to wait another 2 days, maybe wait another 3 days just to confirm, right? Because what you're doing here is you're playing on a daily time frame, okay? But over here on the right hand side, this is a 5-minute time frame. So compare a daily time frame with a 5-minute. Which one is going to give you the result much more quicker? The 5-minute time frame, of course. So you can see here it happened within like 30 minutes. And here it's going to happen most likely like a week, right? Let's give it a week. It's going to give it a rundown, and then a consolidation, and then now you start seeing like a run right back up, right, in a week span. And that is where you're like, well, maybe I needed that the analysis off of that, because maybe inside that green zone, I don't want to go for like a full bounce. Maybe I just want to go ahead and just get a little piece of a movement. If I just get a little piece of a movement inside that demand zone, then that's where I can be like, okay, this is what I want to day trade, because you're day trading a reaction in that green zone. Even though that it's a daily time frame, it's a daily time frame demand zone, you're using a 5-minute or 15-minute, 1 minute, whatever reaction to make you money, right? So let's just say, for example, like over here, right? So it's the same thing. If I were to use like a zone right here, look at this, and this is a 1 day. Look on how the market made new highs, came back down into here, touched this area, but look on how much, it lasted. Not very long, right? Only 3 days, right? Well, actually 6 days, but let's just say 3 days of our entry, let's say, off of this demand zone, off of this candlestick right here, where my mouse is. And that's 3 days of a run up. So think about it, from 584 to 595. It didn't really run much, but maybe you're on these lower time frames confirming just for a small move, right? So you're using a daily time frame, but you're not just like, oh, okay, just touch my demand zone on a daily time frame, let me just buy just because. And you're trying to capture like a weekly contract or like a weekly expiration that expires the same week, because it's not kind of smart. What it is that if you're trying to day trade it, then what you want to do is go into those lower time frames, and it's going to be quick in and outs. And that is what this mini trading checklist is for, is to have, or just to execute fast and clean, quick entries and exits, and secure those profits fast. Because if you're not, let's just say careful, or if you're, let's just say just trading out the blue, then most likely it can do this, and you're like, well, what went wrong? I mean, maybe you held on for too long. At the end of the day, not all levels or all zones is supposed to see something like this. But yeah, so this one, I mean, again, this could have been different, could have made new highs, but it didn't. Okay, that's all right. Now we have to adapt, right? We have to readjust. We have to read more about the stock so we can go ahead and see what is next. Okay, so that's pretty much what it is. But yeah, I'm on fire with these this free game that we're doing tonight on this stream. Okay, so whoever wants to rewatch this, then go ahead and do it. If you have somebody that wants to check this out, send them this video. And yeah, we always talk about some sauce on this on these streams. Open. So open. Let's do open. So there we go. So remember how we had this demand zone? We had a break of structure. It hasn't even touched that area. Hasn't been ready. What has happened within the last 3 to 4 days? Yeah, we saw like a buy up on that candlestick, but then the last 3 days, this was like on Tuesday, but then on Thursday to Friday, so Wednesday, Thursday, and Friday, we saw like a rundown. If the market comes back down into that green zone, then all right, perfect. Now we're talking. Now this is where we can, put our glasses on, put our shades on, and let's get the ball rolling. If this demand zone here does show you that it does want to go long, then what do you have to see? You want to see that the market do something like this, right? That's what you want to see. If the market holds that zone, just like the way you see, just like this, just like the way you see down here, right? It's the same exact thing. It held and then it bounced, then that's the same thing that you want to see inside that zone. So even though that this is a daily time frame, when the market comes back down to here, maybe you're on that 5-minute, 1 minute time frame, and you're trading and trading and trading. But remember, the goal here is to get in when there is value, or where you are expecting a volatility or like a big volume push, and that's where you want to buy. All right, so you could do the two things, is to get in before the volume kicks in, and you're still applying like very aggressive risk management, because again, at the end of the day, we're placing predictions on a level, and that you can do that's the first thing that you can do, is just put your trade in before the volume kicks in, or just two, which is much more safe, right, is to just wait for the market to touch that zone, the volume's kicking in, and now once you start seeing a trend being built, then hey, we can make something out of our investment, right? So that right there would be a nice zone on this daily time frame, which would be that demand zone, and that's from like 6.44 to 5.52. Okay, so that will be the zone. I'm expecting more of a rundown, and if so, then perfect, right? But right now it's like, I think if I go to like a 15, let's see a little bit more on that. And if you're enjoying this stream, like this up and let me know what you think. So look at this. It's the same exact thing. You can clearly see that the market is down falling, down trending, break a structure. Even though that you have break a structure, downside, 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 if it doesn't hit your zone, then don't trade it. Okay? If it doesn't hit your zone, then don't trade it. So look at this. Break a structure, break a structure. This one, maybe you had a zone in here, didn't touch it. Okay, this one here, broke structure, higher high, drop. Then this one hit the zone, just like this. Drop right back down. Okay, cool. Look on how clean this is. Market comes back up, and then what happens? Hit the zone again. So over and over, when it makes new lows, same exact thing. Mark out the lows, lows. All right, it didn't hold this zone, right? Because that's basically the low. But again, look at those equal lows. So you have to write those notes. And whenever it reverses, then that is something where you can be like, well, I saw a shift right here. I saw another shift right here. I can use like a zone in here and then bet on the market to go down. Voila, I just took out those equal lows. So remember, what did we find on NAS 100? What did we find on the S&P? We found liquidity at those bottoms. But again, you're going to expect pullbacks. You're going to expect a green market to open maybe by tomorrow, maybe by Tuesday. But maybe by Tuesday to Wednesday, we can see the reversal right back down, and that liquidity point that we found on NAS and the S&P or QQQ, we pretty much mapped it out on this Sunday night stream, right? So it's all about reading the footprints, and on those footprints, it leads you to a bias, and on that bias, it tells you whether to, or your checklist is going to tell you whether you can trade that bias to either go up or down, okay? So that's basically what open looks like, right? It's just going down and down and down. But out of nowhere, you can expect something like this and then this, okay? And it's normal. So at the end of the day, just be patient. Also, let's see. Let me go into GLD. And what I want to do on GLD is that GLD, like I said, we've been talking about like on gold that at one point it's going to hit 4,000 very, very soon. I'm kind of pissed that I didn't get myself into before that 4,000 break, but I think that there's still more time. Okay, there's still more time to get myself into gold, and gold might be just one of those that to slap onto my watch list throughout the week and just try to get the or not try to predict that bounce, but just see how can the market U shape right back up and money kicks back into the market, and that's where everybody's interested as well. So the goal as a trader is for you to read more about the candlesticks, but what do the candlesticks mean? As in, is there traders, is there investors interested at this price point, at this share price? And if they're interested at the share price, then it's going to increase in value, which brings in more demand. They're going to be on, putting in more demand on the price and price and price. And what happens? When there is demand, we see crazy pops. So something like maybe you traded GameStop, right? Back in like, I think it was like 2021 or 2020, is that it did like a crazy run up. And also I think this was like AMC as well, AMC and GameStop. But where I made crazy amount of money was on AMC, which was around $6,000 on AMC. And that was based off of like the FOMO, right? Because everybody didn't want to miss out on that run up because it was being talked about all over the place. So it's the same exact thing. You are seeing gold being talked about all over Instagram, all over YouTube, or maybe these Reddit forums or whatever. Then that was like, wait, gold is actually going up and I don't want to miss on that run up. Let's put some money into gold and let's just see, how we can make money, right? So that's what we're seeing on GLD right here, is that we're seeing that the value is increasing within the last 3 to 6 months, right? Because if you look at this, crazy run up, right? We've been talking about gold when it was like over here. Yeah, there was some times where we're like, okay, yeah, it's consolidating. But I'm like, well, you know, we can go for some puts here and there, but also some calls. But I'm aiming for more of the upside. But when it does break like this, it's going to go freaking crazy. So if you want to look at this, I think we did talk about gold when we started these streams again, which was like, what was it, like 4 weeks ago, 5 weeks ago, is that we seen like gold like over here, right? And then out of nowhere just rip like crazy. So now every day or two, or every 3 days or so, we see like new highs, and new highs. But like I said, gold is gonna just continue on going up. Does that mean that go ahead and just, you know, trade this tomorrow for buys? I mean, you can, but it will be like, kind of be very, very careful on that, because remember, you're here as a day trader, you're here as a scalper. You're not here to hold on to a trade and just expect crazy highs, because what you're doing as a day trader scalper, you are buying these contracts and you're saying that I'm betting on this stock to hit this share price at this point before this date or on this date. And that's what the expiration is for. So gold, like I said, just wait for more of a pullback. And then once you get that pullback, then all right, perfect. Go ahead and trade it. So if you wanted to learn on how to trade those pullbacks, then there is a video that's called on how to draw supply and demand zones the easiest way. And I talk about 3 steps. Find the trend, find the pullback, and I show you on how to find the pullback, and then what to do after that pullback. And then now that's number 3. Draw your level, draw your zone, and then go for it. And that's on the YouTube channel. Whoever is new here watching this, RZ is legit. I've been in groups with him for years. Great teacher. I appreciate it. Appreciate it. So let's do snow. Okay. Snow. Same exact thing. We had a zone here, right? It failed. It went lower. That's fine. You're going to see things like that. It's totally cool. But what I want to do on snow, because this is a stock that I'm looking at for this week, if not for the next week, is to mark out the current highs and lows. Okay, so what we're going to do here is we're going to say that this is a break of structure, just like this. And the next one is like over here. That's a valid break of structure, just like this. And before I move forward, like this up, guys. Like this up. If you know anybody that wants to be part of this stream, send them this link, right? Tell them that we go live every Sunday night and how we prepare together as a team and be part of the Vault family. So back to this though, higher highs, and after this new highs, market comes right back down, and then we are basically have this gap still, okay? Is there a chance that we can come back down and fill that gap? Yeah, of course we can. But the thing is that, you know, we would have to see more confirmations that it does want to do that. So what I'm looking at right now, snow does have like some sort of like a trend line liquidity that we have below here. And we have a clean demand zone that sits below down here too. So the thing with this one though is that we do have a run up. We do have new highs. But when the market is coming back down, I would say really let this do something like this, like the way we just seen on gold. And when it breaks above like a trend line, then that's where you can apply those lower time frame structural points, like a 30-minute, 15-minute, and go for like some buys or look for some longs. Because on a daily, it's basically is most likely going to give you like a chop slash something like this, most likely. But what I'm saying is like if you really want this to go up on snow, then you must wait for the volume to kick in and just see the green candlesticks to appear, right? And that's basically what you want to see. So it's the same thing like I guess we can say, I guess over here at the time as well, is the market runs up, and look at this, we have like a lot of gaps below, and after all those gaps below, I mean, that is a valid zone, right? If you look at it, that's a valid zone. But then at this time is that, okay, market's going up, market's going back down. But then look at this, it builds up all this liquidity right here. And after that, okay, higher high, higher high, and you can use these zones. Look at this, key levels here, and bet on the market to go right back up again, right? Because you're looking for an area of a break, so just like this, and you're drawing a zone off of it, right? And this is where you are saying that the market's is going to come back down into, and you are saying, hey, maybe you want just a little small piece of the move, just like this, you're out and you made your money, or maybe you're expecting the market to do new highs, right? And if you are making new highs, then the best thing to do here is to close and rinse and repeat. And the more that it does something like this, the more that you can go ahead and trade it, right? But then once you start seeing some crazy sell-offs, then we're like, well, we found this equal lows right here, and that shows that we have a break of structure. Now it's making lower lows, lower highs, lower lows, lower highs, lower lows. Okay, so the liquidity that we saw on the bottom left-hand side in that imbalance in that demand, it all made sense because 2 weeks or 3 weeks later, we saw that the market is now down here again. Okay, so it's the same thing over here. So when the market's making new highs and new highs and new highs, use those lower time frames. So just turn down the setting a little bit to get more details to see, can you go for that quick volume break? And then if so, then place your calls, your buys, and then don't be surprised if you see something like this, maybe within the next month or two, and then to touch this zone actually. And then from there, you see something like that, okay? So snow is just, I would say, just wait for more candlesticks, more green candlesticks, and wait for, you know, those lower time frames to give you a bullish signal, right? Right now, if I were to go to like a, or let's just say a 15-minute time frame, it's just kind of just like back and forth, back and forth, back and forth. But at the same time, it's like if we do see some volume kick in tomorrow, maybe by Tuesday, then you can go for like quick scalps, quick trades, and take it to higher supply zones, like over here. And then you already have like price target points where you can sell. And that's it. Because you possibly don't even care about like going for crazy highs or 266 or 280. Maybe you just want to get a trade in here from this level and just take it to maybe like somewhere in here, just like a $3, maybe $5 point move. You're good, right? So that's pretty much it though. I am done. Pretty much covered the ones that I wanted to cover. But yeah, like I said, make sure to have a checklist, rewatch this webinar tonight or tomorrow morning, because we did cover the S&P and QQQ. Those are the main ones that I would say to really focus on, and also gold. Okay, so other than that, that's pretty much it. I'm going to let everybody go here, but before we let you go, make sure to like up this stream, subscribe if you haven't, and if not right now, then it's totally cool. Maybe I hope like I earn your subscribe later down the line. Okay, so tomorrow we are live at 9 a.m. Yeah, we are live at 9 a.m. and then we'll go from there. Okay. So other than that, good night, everybody, and you have a good one. Okay. So see you all tomorrow. Peace.